Hi students, today we are going to see the topic of net working capital. So what is net working capital means? The net working capital is the difference between total current assets and total current liabilities. So total current assets minus total current liabilities. So it represents the contribution of long-term funds for the build-up of total current assets. Now, how we have to calculate the net working capital? Let us see the pro forma to calculate the net working capital. To calculate the net working capital, we have to use the formula total current assets minus total current liabilities. Let us see the pro forma how we have to calculate the working capital. So, see here the particulars is current assets. So, the current assets means here we have to see the assets which is the cash in hand, cash in bank, or whatever the balance we have to minimum cash we have to note it in the current assets. Next one is the inventories, stocks, raw materials, work in progress, finished goods. Okay, this also the assets. Next one is receivables, debtors and the bills. So these are the current assets. We have to add all these assets which is cash in hand, inventories and receivables. Assets is called the total current assets. Okay. Next one is current liabilities. In the current liabilities, we have to calculate the current creditors for purchases, creditor for wages, creditor for overheads. Whatever the liabilities we have to calculate it in the current liabilities. After calculating, we have to add all these current liabilities, total current liabilities. So we have to calculate the net working capital. For calculate the net working capital, the formula is current assets. CA means here current assets minus current liabilities. Then we will get the value of the net working capital. If there is any additional information in the sum, we have to add the margin for contingency. So when we add that margin, then we will get the what is the net working capital required. In the sum, see in the case study here, Virag Industry Limited sells its products at a gross profit of 20% on sales. So the following information is extracted from its annual accounts for the year ending 31st March 2010. Okay. So here they given some data about the sales, and that is which is the current assets and current liabilities. See the sales at 3 months credit is 40 lakhs. Raw materials purchase on credit 12 lakhs. Wages paid 15 days in arrears 9 lakh 60,000. Manufacturing expenses 1 month in arrears 12 lakhs. Administrative expenses 1 month in arrears. These are all the credits which is a payable. So this wages or manufacturing expenses or administrative expenses is under come the liabilities. Okay. Sales promotion expenses payable 6 months. So for the payable they have to pay in advance. So how much? 2 lakhs. Income tax payable quarterly. Last installment falls due to in March 2010. 4 lakhs. And they given some information here. The company enjoys 1 month credit from suppliers of raw materials and maintains 2 months stock of raw materials. So what happened here? The credit in the company is enjoying 1 month credit from suppliers of raw materials and maintains 2 months stock of raw materials. Here the raw materials we have to calculate individually. Okay. And 1.5 month stock of finished goods. Cash balance is maintained at 1 lakh as a precautionary balance. Assuming 10% margin, find out net working capital requirements of the company. So already I provide you the pro forma. On based of pro forma, we have to calculate the net working capital. Okay, let us go to the sum. How we have to calculate first. As usually we know the formula, that is net working capital is equal to current assets minus current liabilities. So here we have to calculate the current assets. What are the current assets? Let us go to the sum. First, let us calculate the current assets. This we have to write it as a working notes. First, we can do the working notes, and then we can make a pro forma and add in the table. Okay. Then we have to calculate the net working capital. Okay. First, let us see the current assets. What is the first statement they are giving? They are giving that the sales at 3 months credit 40 lakhs. So 3 months credit they are giving in the sales. Generally the calculation for 3 months. For a year how many months are there? 12 months. So for here they are giving the credit on 3 months. Let us write sales at 3 months. 3 months money is 40 lakhs. Okay. So for annual year there are 12 months, so we have to calculate 3 divided by 12 into 40 lakhs. Okay. So let us calculate it. C divided by 40 lakhs is equal to 10 lakhs. Okay. Next one is that this is the second one, calculating the raw materials purchased on credit. Where the statement it is, I will show you 12 lakhs. Where the statement it is, here the statement which is given, raw materials maintains 2 months stock of raw materials. Maintains 2 months stock of raw materials. This is the statement which is given. So the purchase is done on the credit for 2 months. So maintain where it is? It is in the stock. Maintains 2 months stock. Okay, the raw material. So how we have to calculate? For 12 months, 2 divided by 12 into 12 lakhs. Then we get that to maintain the raw material stock. So stock means it is the asset. Okay, like this the calculation. Next one, we have to calculate finished goods. See here the finished goods, raw materials, work in progress, finished goods. Next we are going to calculate the finished goods. What is the statement given here? Okay. One and a half month stock of finished goods. So before we have to calculate the finished goods, here we have to do the sum. What is that? That means we have to find out the cost of goods sold. So to find out the cost of goods, what we needed? We needed the sales and gross profit. Okay. What we needed? We need the sales and gross profit. In the sum already they given gross profit is equal to 20% on sales. Okay. So where we get the sales amount? In the sales amounts, to calculate that, the sales here, see 40 lakhs. Okay. So 20% into 40 lakhs. You can get in a doubt here, madam. Here you given the sales at 3 months credited is equal to 40 lakhs. That means the sales what is happened is 40 lakhs, but we are giving the credited 3 months for the 40 lakhs. Okay. So the sales is 40 lakhs. So you have to identify that the sales amount is the 40 lakhs. For that 40 lakhs we are providing the 3 months credit. Okay. So here the gross profit is 20% on sales. So what is the sales amount? 40 lakhs. 40 lakhs into 20%. So now we will get the value of the gross profit. Okay. let us see. 20% means this is implies 0.20 into 40 lakhs. When we are calculating, it is rupees 8 lakhs. Okay. Now, what is the formula of the cost of goods? Therefore, the cost of goods sold is equal to sales minus gross profit. Sales already we know that 40 lakhs. 40 lakhs minus what we get at the gross profit? 8 lakhs. 8 lakhs. Now we have to see the differences. Then we will get the 32 lakhs. So the cost of goods sold is 32 lakhs. Now we have to find out the finished goods. How much the finished goods? The finished goods they are asking 1.5 month. The finished goods is the 1.5 month of stock. So 1.5 month of stock means 1.5 month of stock. This is equal to 3 by 2. 3 by 2 is equal to 1.5. Let us see. Okay. 3 by 2 is equal to 1.5. So 1.5 months divided by 12. Why? Because for the annual year we having 12 months. 1.5 divided by 12 into 32 lakhs. So the 32 lakhs is the cost of goods sold. So where we see this all the sums, we see in the cost, already we see in the cost sheet about the finishing goods, how we have to calculate the finishing goods. So we get the value here 4 lakhs. Okay. Now the finishing goods is the 4 lakhs. Next, let us see the prepaid sales promotion expenses. The prepaid sales promotion expenses for the 6 months in advance 2 lakhs. Okay, if you calculate it for the 6 months, 6 by 12 into 2 lakhs, that is 1000. So for annual period it is 2 lakhs. We have to take for the annual period 2 lakhs directly. Okay. Prepaid sales promotion expenses 6 months in advance 2 lakhs. 6 divided by 12, 2 lakhs is equal to 1 lakh. But when it annual period it is 2 lakh. Okay. So we have to take the 2 lakhs directly in the current asset sum. Okay. Next one, in the sum there is the cash balance. Cash in hand or cash at the bank. So the cash balance, how it is maintained? The cash balance is maintained at rupees 1 lakh. So here the cash balance maintained, 5th point, maintained 1 lakh. Okay. Now we finished the calculation of the current assets. Now we have to add all these current assets and we will get the total current assets. Before that, let us calculate the current liabilities. Next one, current liabilities. Okay. Let us calculate the current liabilities. Current liabilities, 1 month credit on from suppliers of raw materials. So here the liabilities of the raw materials for 1 month means we have to calculate 1 divided by 12 into what is the raw materials purchases amount is 12 lakhs. So when we are calculating for the 1 month of the current on supplier of raw materials, we will get the 1 lakh when we are calculating in the calculator. Okay, first. Next one, wages paid 15 days. Wages paid 15 days in arrears. Rupees is 9,60,000. So for 1 month how many days? 30 days. So we have to calculate like that. 15 divided by 30 into 9,60,000. divided by 12. Then we will get the value of wages paid for 15 days is 40,000. Okay. Let's see in the calculator. You can see the calculation if you have any doubt. Okay. 15 divided by 30 into 0.5 into 9 lakhs 60,000 is equal to how much? 48. Divide again, we have to divide it 12. 12 means 12 months is equal to 40,000. Okay, clear the calculation? 40,000. We will get the 40,000. Next one is the manufacturing. Manufacturing expenses. This one is also 1 month in arrears. Okay. How we have to calculate means as usual 1 divided by 12. 1 month into 12 lakhs is equal to 1 lakh. Okay. Next one. Administrative expenses. Administrative expenses 1 month in arrears. How much? 1 divided by 12 into 4 lakhs 80,000. Then it will be 40,000. Next one, income payable. Income payable, how much? Income tax payable. So this is the last installment. Last installment means for the 1 year installments. Final due in March 2010. So what is the amount of the last installment? 4 lakhs. Okay. Now we have to draw the pro forma. So how we have to draw the pro forma? Pro forma, let us write the statement. So like this we have to make the pro forma. Virag Industry Limited's year ending 31st March 2010 working capital, particulars, amount, current assets. First we have to mention the current assets. In the current assets we already make a working notes here. See this working notes. First one sales, that means debtors. What is the sales we got for the 3 months? Right here 10 lakhs. Okay. Did the stock raw materials for 2 months. Raw material we calculate for the 2 months. The raw material is 2 lakhs. Okay. Next one is finished goods. Finished goods 1.5 months. Okay. 4 lakhs. Next one is prepaid expenses. Prepaid expenses. For the promotion they paid in expenses 6 months, but we have to calculate it for the 1 year. Okay. So for the 1 year it is the 2 lakhs. Promotion, prepaid promotion expenses is 2 lakhs for 1 year. Next one, cash. Maintain the cash balance. How much? 1 lakh. So now we have to calculate all these debtors, raw materials, finished goods, prepaid expenses and cash balance. When we are calculating this total, we will get the 19 lakhs. So this 19 lakhs is the total current assets. What is this? This 19 lakhs is the total current assets. Now we got the total current assets. Okay, now we have to calculate the current liabilities. In the current liabilities, first we have to see the 1 month credit on the supplier of raw materials. Okay, supplier or purchases. Okay, purchases for raw materials. So what is the credit? 1 month. When we calculate, we get the value 1 lakh. Next one, wages. wages paid 15 days. After the calculation, we got the wages paid for 15 days is 40,000. Next one is manufacturing expenses. Manufacturing expenses for 1 month credit. Okay. So in this 1 month areas, the value is 1 lakh. Next one, administrative expenses. Administrative expenses. The administrative expenses after the calculation 40,000. Next one is the income tax payable. So this is the last installment for the year of the March. So income tax payable, it is the last due. So that amount is the 4 lakhs. Okay. Now what we have to do? Now we have to calculate this total liabilities. When we calculating all these totals, we will get that 6,80,000, 1,40,000, 1,40,000, 4 lakhs. Okay, 6,80,000. Now 6,80,000. Now what is the formula? We have to use net working capital. Therefore net working capital is equal to current assets minus current liabilities. Now 19 lakhs minus 6,80,000. We will get the value 12,20,000. So the net working capital value is 12,20,000. In the sum, they ask us, assuming 10% margin, find out net working capital requirement of the company. So we have to do what we have to do? We have to add the margin. Okay. So when we are going to add the margin, what we have to do? We have to calculate. What is the percent they given? 10%. 10% of, assuming they given the margin, 10% margin. So for this 10% margin, this 10% when we are changing into decimal, this is 0.1. 0.1 into net working capital, how much? 12,20,000. 12,20,000 into 0.1 is equal to how much? 1,22,000. Now what we have to do? We have to calculate. See here, net working capital required. So for that net working capital required, we have to calculate what is the amount? 12,20,000 plus 1,22,000. Then when we calculating, we get the value 13 lakhs 42,000. This is the net working capital for the company required. Okay. Required for the company. Okay. How much? 13,42,000. Like this, we have to calculate the working capital by using this pro forma. Okay. I hope you understood the students. Thank you. Have a nice day.